Yo, what's good, y'all? Y'all remember that show Deal or No Deal? Well, I'm bringing it back, real estate style.
I guess I got my swagger back.
Yo, so one of, if not the most important aspect of real estate investing is determining if you have a good deal or a bad deal on your plate. In real estate, you only make money when you buy. If you didn't know that you made money on this deal the day you bought it, it's a bad deal. What I'm gonna do with this series is go through real life deals that I'm getting to my inboxes every single day and show y'all how I determine whether or not I wanna move forward with a deal or throw it in the trash. So we're gonna analyze a 3-bed, 2-bath property that a wholesaler just sent to me yesterday. And we're gonna see if I should flip this property or if I should just leave this property alone, throw it in the trash. First thing we do anytime we get a deal is we gotta verify to see if the neighborhood is, all right. We gotta see what, use some common sense right here. And to me, I'm liking this neighborhood. I'm liking this neighborhood. These are the kind of neighborhoods I like. Established neighborhoods, nice, well-kept neighborhoods. If the houses were all built around the same time, which you can tell all these houses were built around the same time, this is probably a class C area, right? It's not a class D by any means, but it's not quite a class B. So it's an older neighborhood, but it's still a well-established neighborhood. So first step, we good money with that. So the next thing that we got to do after we check the neighborhood is verify our ARV. So the ARV is your after repair value. So that's essentially what the property will be worth once it's fixed up. So in order to check the ARV, what we do is look at the comps. The comps are the comparables. So the comparables, this is pretty much where you compare similar kind of properties that are similar in size in terms of beds and baths and also square footage and also finishes. So we want to make sure we're looking at properties that are really similar and also similar in proximity or close in proximity and in similar neighborhoods, ideally the same neighborhood. So this particular wholesaler sends comps but I always say, even if the wholesaler sends comps, you verify your own comps because they could send you some BS comps just to make you think that the ARV is actually a lot higher than what it actually is. So what we do then is, okay, so we have 3 rent comps and we have 4 sold comps here. So the sold comps are what we're gonna use to verify the after repair value. So right off the bat, I'm seeing that, there's one comp for 175. It's a 4-bedroom, 2-bath. And there's about 3 other comps that range from 142 to 149. And those are 3 bedrooms and 1 and 2 baths. So the first thing I want to see is to see, okay, 175, can I get that ARV? Because we know, okay, yeah, they're all in close proximity. So the location actually checks out. Let's see, 4850 Castle Prince is this one. So what we're going to do is verify to see if this can actually be a comp. And I'll show you how we do that. So here's the comp property. So it's a 4-bedroom, 2-bath, 1,500 square feet. Our property that we're looking at is a 3-bedroom, 2-bath. How many square feet do we have? 1,600 square feet. So as far as square footage checks out. 1 bedroom smaller though. So that is definitely going to hinder the ARV from getting that high, quite as that high. This property was definitely rehabbed. So they did a pretty nice rehab here. So I could definitely see they didn't do anything with the floors. Looks like the floors didn't really get updated. Mainly they just really updated that kitchen. So the kitchen is always obviously the biggest selling point in the home that will determine your ARV, at least on the interior. Okay, that's one good comp. That's a decent comp. So whenever you're checking ARVs, you want to verify that you're using sold comps. So the house had to have sold. So Zillow will tell you when the property was actually sold. So yeah, this one was in end of last year, November of 2020. So that's a good time frame, right? It's within the last 6 months. So we're good there. But that's a high-end comp. You don't always want to use your high-end comps. We want to stay conservative. So let's look at one of the lower comps and see why this one, let's say 5858 Castle Brook. Why did this one appraise so much lower? So it's smaller. Okay, so that's definitely a big factor. 1,200 square feet. Ours was 1,600, so we definitely have an advantage there. 400 extra square feet. It's nice and clean, but it's not updated, right? It's not really updated. Look at the cabinets and the counters. It's very, very basic. Those are rental style finishes. I can definitely see why it would have appraised, why this one would have sold for 149. So that tells me right off the bat, we're in between 149 and 175. So how can we narrow it down? It just is gonna depend on the finishes that we wanna put in there now. So ideally to get a higher ARV, you gotta put nicer finishes. So if we wanna get that 175 ARV, like 4850 Castle Prince, we're gonna have to put nicer finishes in this house. But remember, this one is a 4-bedroom, so we won't be able to quite get as high as 175. Maybe we can get up to, let's say conservatively, maybe 160. That's probably a very conservative estimate, 160 for your ARV. Now, right now, so far we have a purchase price of 127,000. That's what their ask price, at least. We're not gonna say purchase. And so far our ARV will go at 160. So now let's look at actually the pictures that the wholesaler sent to see how much rehab this property can get, at least get a ballpark estimate of what the rehab will be for this property. Because we can analyze these deals in a few minutes just if we have the pictures, comps, and Google Street View. You good money if you had that. So, I mean, it's not too bad on the exterior. Looks like the siding isn't too bad. It might paint it a little bit, but other than that, it's not too bad. Well, if we're gonna flip the house, we'll just resurface the full pool, replaster it. Because typically if you're gonna keep this as a rental, you don't wanna have a pool. So here's the interior. It's not too bad, actually. Cabinets look really good. Floors look really good. We'd probably just repaint the cabinets and put some new hardware and then new appliances. But other than that, it's really cosmetic. It looks like on the interior, paint, flooring is decent. You know, it doesn't even look too bad. New cabinet vanity in there. We can say, just based on my experience, that would be about a $35,000 to $40,000 update on that property as far as the rehab goes. So that's what we can use for our rehab estimates. All right, so what we're gonna do is go into our flip calculator and determine whether or not this is a deal we should pursue. So purchase price, we can say is $127,700. That's what they were asking. Rehab, like I said, between 35 to 40, we'll say 37.5. And ARV, which is what this property can sell for once it's fixed up, we'll say 160 to stay conservative. I know I need to bring $58,000 to close based off of my hard money lender only lending either 70% of the ARV or 85% of the total project cost. I talk more about that in my course to determine, you know, how that actually looks and what you would typically get. They usually will loan the lesser amount. So in this case, it's 112. So I need to bring $58,000 to close on this property. So I would go to my hard money lender and say, hey, I want to borrow $60,000. I'll pay you 10%, 2.5% origination, and we'll make that deal happen. So that's going to cover my cash to close now to close on this deal. Holding period, we always want to estimate conservatively. This is a very cosmetic deal, but we'll say that the purchase price, or we'll say that it's going to be a 6-month hold from buying it to selling the property, right? So these numbers here are just a template based off of my market. Like I said, in my course, I talk about how to determine what yours actually will be. And so now, before we look at the sell end, I want y'all to let me know, what do y'all think? Do y'all think this will be a deal? Well, I tell you what, if you said that this was a deal, we got some work to do. We got some work to do to get you right, because you would have lost you a lot of money on this one. I'll tell you that. You would have lost on this deal $38,628 if you purchased this deal. Just look at this spread. 127 purchase, 160 ARV. You only really have $30,000 to work with, and your rehab is already $37,500. So you're gonna be all in more than what you can sell the property for. Plus closing costs, plus the profit or the interest you pay to the lender, plus holding costs, you're gonna lose $40,000. That's a given. So how can we make this a deal? This is an awful deal at purchase price. The only way to make this a deal is by obviously decreasing our purchase price. So I can tell you right off the bat, in order to make this even a semi-attractive deal, the minimum I would be, or the maximum I'd be able to pay for this property is $75,000. The wholesaler sent this to me for $127,000. I gotta say, no, you know what? I can only pay $75,000. If you go to a wholesaler and say, and offer them $50,000 less than what they offered, they will stop sending you deals, because you will now be considered a tire kicker and a time waster. So personally, if it's this far off, I mean, I knew this was this far off the moment I saw it, because I saw the ARV and I saw the purchase, and you know, it's just too close. 127 to 160, bro, that's only $33,000 of spread. That's not anything. Unless your rehab is gonna be $100, because you had to go buy a broom and mop and some disinfectant wipes to wipe the counters. If that was your rehab, then it was a deal. The biggest thing here is always estimating conservatively. But one thing you gotta remember too is that once we change the purchase price, we have to change our amount from the hard money lender or from our private money lender. If we bought it for 75, we'd only have to bring 19 to the table. So I'd go to my private money lender and say, hey, can I get 25? They give me 25. Boom, that's less interest I pay, so that's more profit. So, that being said, this was not a deal. This was a terrible deal. If you're buying those kind of deals, I mean, you're not gonna be in business for much longer. So help yourself. But that being said, if you did enjoy this video and you got some value from it, please hit that thumbs up button for the YouTube algorithm so that they know that this is good content that needs to get pushed out there some more. But other than that, I'll see y'all in the next one.